Hello everyone, welcome to this specialist trading educational presentation where today I'm going to be talking about introducing our new short-term strategy number 10. Now we're real excited about this new strategy because it is the first strategy we've had for traders and all of our students around the world which specifically just concentrates and focuses on the short term. I know a lot of you are saying, well, why are you just having a method that has to do with short-term trading? Well, we talked to a lot of our students and prospective members of specialist trading about this, and this is what they said, getting back to us. They said, being out of sync with fast-paced markets often results in missed trades and or losing trades. So when you have a fast-paced market, something we haven't had in a while, that's a real short-term type scenario because things are moving so fast. You know, when you see a market that's going straight up or straight down, you're not thinking about the long-term implications of this. You're thinking about getting in and out rather quickly because the market is moving so quickly. But as you see here, this will often result in missed trades because you're not quick enough or don't know exactly when to get in or when to get out, or it will result in a losing trade. You get in on the wrong side or you wait too late, and then when you finally do get in, it results in a loss. For example, let's look at these examples right here. Now, PDD, as you can see, was going fairly quickly up to the upside. And as you can see here, let's say you wanted to get long this, but you actually wanted to get long at a lower price. So you say, you know what, I'm going to wait for this before I get in. It's a great buy, or it's a great investment, but I just don't want to get in now at the very top. So you hold off on buying, and then this happens, okay? It gaps up, and you say, oh gosh, I missed the trade. But then you say to yourself, well, I kind of remember and noticed something here. I took that $5,000 online course on candlesticks, and candlesticks mainly have to do with reversal patterns, and I see right here that this is a shooting star. I learned in that course that that's a very strong reversal pattern, and on top of that we have a big gap here, okay, from where we closed on this day to where we gapped up. So I was always taught that, you know, gaps are meant to be filled, so most likely this shooting star is telling me that we're going to come down here to fill this gap. So I still like this stock. I'm going to put a buy order, and I'll buy when the gap is filled, somewhere around these levels. So you feel good about yourself, you know, excuse me, you've analyzed the situation. You feel like, I'll just wait and I'll get it at a lower price. And then this happens, okay? So in all actuality, you were right. I mean, this was a fast-paced market and you wanted to buy, but it looks as if you missed the trade. But did you really miss the trade? Because with the method I'm going to introduce to you today, you actually would not have missed anything. Strategy number 10 would have generated a buy signal right here, and you could have taken advantage of this short-term run-up. And even if you missed that setup, strategy number 10 generated a buy signal right here, where for the one-day up move, you could have taken advantage of that the following day. So that's a missed trade scenario that, excuse me, a lot of our students are telling us about. Let's look at the losses that often happen in these fast markets. Let's say, as we look here at an older chart of the QQQs, you wanted to go short the market. You think the NASDAQ is going to fall out of bed. Maybe you want to buy some puts, but you just want to go short, all right? Either you're going to buy puts, you're going to actually short the stock, the ETF, but you're going to short it at these levels. This is where you think, according to your analysis, that it should go much lower. So you hold off, you didn't get in, and then it does actually go lower. You miss it. The next week, it hits the exact area of where you thought it was going to go. Now that is a missed trade. But then you say to yourself, well, you know, it got right down to this support. This is where I would have covered and made a nice quick little profit. But if this is valid support, if this is where all the institutions are buying, and I think the NASDAQ is going to hold, then if it's good enough to hold, it's good enough to buy and go long, right? Because maybe it's going to come back up to these levels. So even though I missed the short side, I'm not going to miss going long. So you decide to buy right here. And you buy, and this happens, right? Look familiar. Now you say to yourself, well, I had another losing trade. Nothing seems to be working. But is it really a losing trade? Because strategy 10, the method I'll introduce to you today, actually would not have generated a buy signal, but a sell signal right before the market fell out of bed. Now it doesn't look like much, but these 2 down days would have represented roughly, I believe, about 1,000 points in the Dow. And I'm going to show you how simple it is to actually implement strategy number 10 on our platform. This is the PTS Primo charting platform, the trading educational platform that actually teaches you how to trade these fast-paced markets. So You see how educational this presentation is going to be. We just shared with you just a little glimpse of how consistent this method can be. So welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. 10 years ago, I teamed up with Pro Trader Strategies with one goal, and that was simply to educate traders. I've been trading for roughly 42 years. In the next couple of months, it'll turn into 43. I can't believe it. I've been around for 43 years trading. And in that 43 years, I've traded just about everything and anything you can think of. Now, I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years, I was a specialist. That's where we get the name Specialist Trading. A specialist was someone who simply made markets in roughly about 50 or 60 stocks. So I made markets during the crash of '87 and the bull market that followed. And so while I was on the floor, I traded straight up markets, straight down markets, real fast-paced markets. I traded just deathly slow markets where nothing happened for months, where the market just went sideways. I traded just about every system or technique you can think of. It's been around before. Trust me, if you're trading something that you think is brand new, it's been around before. It's just been renamed, rebranded. And so we're here to educate you in the things that really work because, as I said, I've traded just about everything and anything you can think of. So why waste your time and mostly your hard-earned money searching for that holy grail when it's all about educating yourself? So that's what we do. We teach you. We don't promise to have the perfect method that will make you retired or make you a millionaire in the next 6 weeks. We don't believe in that. And if anyone ever tells you that in a webinar, you should run. What we believe is sound fundamental education because that's what will sustain you. This is the same way I was taught by my mentors when I was struggling some 43 years ago and has sustained me now for 43 years. So hopefully we'll be able to do the same for you. So you're going to see that our brand new method, which has a very high level of consistency in trading short-term scenarios. But before we begin, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results. In fact, I have roughly about 150 slides of performance results today pertaining to strategy number 10, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So remember, once again, our goal is not to force feed you signals. If you've come to this webinar today thinking that I'm going to tell you what to buy once we conclude today, or what the perfect market is, or the perfect time frame you should be trading, or the perfect system, you've come to the wrong place. Our goal is not to trade for you because a good mentor does not trade for you. He teaches you how to trade. Now, someone could say, well, why can't you just give us the signals? Because if we did that, you would basically be doing the same thing that just about 99.9% of all traders do, is take themselves out of the game. You would be relying on someone or something else to make your trading decisions for you. And I can't think of a better way to be inconsistent than doing that. The entire industry is based on someone telling you what to buy or what to sell. Either you see it on TV or in a webinar. We're going in the completely different direction in that we want to educate you so that you make your own decisions, not us. Each and every one of our strategies has upwards of 5 to 7 different entry points, 5 to 7 different exit points, and 5 to 7 different stop placements. We work with you along the way so that ultimately you can pick which one best fits your nature, best fits your trading persona. That's how you become consistent, not by listening to me or anyone else to tell you how to trade. We just simply teach you the things that have high levels of consistency, kind of like a buffet, and then it's up to you to decide how you want to implement it, okay? All right, with that said, let's begin today's presentation, but a little bit of announcement before we begin. Remember, once again, I want to take all your questions, but I have, as I stated, roughly over 150 slides to share with you today. And if I take each and every question, we'll be here far too long. So with my webinars, I like to take the questions at the end. So if you do have a question, something doesn't make sense, please write it down or try to remember. I promise I'll answer it at the very end, probably in the next half hour or 40 minutes. If, or I should say, the only question I will answer is this one, and it's, are we recording this? Yes, we are. So if you have any difficulty, technical difficulties, any difficulty in seeing or hearing the presentation, we will send each and every one of you a link to this recording at the very end or later on today. The trading consultants at Pro Trader Strategies will do that, okay? Okay, let's begin then. We're going to be talking about strategy number 10. Let's give you a little bit of information about that, some of the highlights. It is our entirely new short-term strategy, all right? Most of our strategies are based on trading either the intermediate to longer term. By intermediate, I mean a couple of weeks or a couple of days to maybe a couple of months. And you can trade them longer if you like. But this is really based for short-term trading. And by short-term, we mean fast-paced market. So you don't really want to be in the trade. Most of the trades are designed to stay in for roughly 1 to 5 bars, okay? And that could be, weekly bars, monthly bars, or daily bars. Now, the thing that's interesting about this is there are many different things that we have, because of the short-term nature, there are many different things that we have never used before or applied in our methods. First of all, if you've heard me talk about methods and trading before, I always talk about the buy-sell line, how powerful that is in only buying above it and only selling below it. Well, guess what? Because of the short-term nature, we're not even going to use the buy-sell line, which is the 50-period moving average. And some will say, well, how do you define the overall trend? We're going to use the PET-D. That is one of our best tools for defining the short-term trend. So that's going to be included within the rules of this particular process. Now, we can't give away the rules, but we can share with you that this is based on a combination of an indicator-based and a pattern recognition-based procedure. So in other words, we're using 2 different styles to determine and to generate signals. As I said, it's designed to trade quick 1 to 5 bar trades. We'll show you also how to stay in the method longer if you'd like to. But because of the short-term nature of this, this is great for option trading. All right, so if you're the type of trader that likes to have these quick trades in options, maybe you want to buy those weekly option time frames, or you want to just get in and out quickly, this is a really good strategy to trade if you're an option trader. Now, we have 2 versions. We have an aggressive version and a conservative version that I'll teach you in the course. Obviously, our aggressive version will have more setups because you're being more aggressive, but along with more trades, you will also have a little bit higher risk. Our conservative version has less risk, but it has also less trades, okay? Now, a lot of people would say, well, why do I want to trade a short-term method? I'm kind of a swing trader to an investor. Well, that's great. There's nothing wrong with that. Most of our methods fall into those 2 categories. But guess what? Every once in a while, when those really fast-paced markets appear, you may want to offset or have a type of hedge on some of your long-term investments. For example, do you remember just a few months ago when the market was really falling out of bed, obviously some news or something about the tariffs, just something that's always coming out of the blue where the market just went straight down. There were a lot of great strategy number 10 scenarios happening. So if you wanted to offset or hedge some of your long positions, you could have taken advantage of a lot of these setups in a downward fast-paced market. And we know that this market has been going up for a rather long time. It's just inevitable that one day, it could be next month, it could be next decade. We have no idea in knowing this. But when it does happen, we're going to have a strong bear market that will have, in the beginning, a very strong downward, fast-paced downward move. This is going to be a great method to take advantage of that move, okay? Now, our edge here, as with all of our methods, is based in consistency. Consistency really means not that you're going to have a ton of trades that are always all winners. No, it means that you will have losses. A consistent method is a method that's able to recoup those losses. So I've specifically put in a couple of examples where you may have had some losing setups, but I'll show you how quickly you could have recouped those losses with the very next setup, okay? So these are some of the highlights. Let's talk about the procedure for the short-term setup process, okay? Once again, I'm sorry, I cannot give away the rules because I believe there's only roughly 4 rules in strategy number 10. It's extremely simple to apply. But let me share with you the process because I can't, once again, divulge the actual rules. It wouldn't be fair to, we've already have some people that have signed up. I only have given one other webinar on this, and we've already have a lot of people that have signed up for the class. Okay, the first thing you want to do in the process is to apply the PET-D. We do this to determine the short-term trend. Remember, we're not basing any of this on the buy-sell line. We don't have to use the buy-sell line. So someone would say, how do you determine the trend? By applying the PET-D. Now, many of you, we have a good crowd here today, I'm sure are familiar with the PET-D, but there are still some of you who are not. So let me just share with you an example of what the PET-D does. It's a color bar short-term trend recognition tool, okay? Now, as you can see here, this is the way most people determine what the trend is in this older example of Aetna. They'll see that it's been going up for a while. They'll see that we're making higher highs and higher lows. And roughly around this time, they'll say, you know what? we're in a full-fledged uptrend. I'm going to jump in and buy here. Maybe off this little pullback, I'll buy here. And you've got a really nice one-day upward move. So you're really proud of yourself. You've got a nice trade going. And then this happens. And all of a sudden, your nice one-day trade turns into a loss. Well, here's what the PET-D does. It's a color bar tool that colors the bars green for an uptrend and a series of red for a downtrend. Now, it's not designed to pick the top or pick the bottom. It's just designed to show you what the market is thinking at the moment. It's a translator. It translates on a tick-by-tick basis what the market wants to do. So you see, rather than determining that you were in an uptrend somewhere here, you could have known right here at these lower levels that you were in an uptrend. And rather than turning it into a large loss and finding out that you've lost everything on this trade, you could have known well in advance that we were beginning a downtrend. As you see in the bottom here, in my over 4 decades of trading, the PET-D is the best tool I've found for capturing the short-term trend. So this is what we're going to be using because this method is designed to trade short-term setups. We're going to use the PET-D to determine what the trend is, either a series of green bars or a series of red bars. That's the first rule in the process. Now we go to step number 2. Let's say we're looking to buy. Well, we're going to identify a shallow pullback. Now people say, well, what is that? Well, a pullback, a shallow pullback, is a 1 to 3 day sell-off in a short-term uptrend. Okay? That's all it is. Now there are certain rules, rules 2 and 3, which determine that pullback. And that's in the course, but it's based on a 1 to 3 day sell-off in a short-term uptrend. Now let's say we're looking to sell. Well, it's the opposite side of the coin. We're going to identify a shallow pullback, but this is a 1 to 3 day bounce in a short-term downtrend. So let me show you some examples just to show you this procedure and how simple it is. And once again, this is not a black box. In the course, we will teach you all the exact rules so you know exactly what to look for. All right, so let's look at some strategy number 10 examples in action. Now, some of these examples are from the last month or two going back. Later on in the presentation, I'll show you some things that happened in the last week, some in the very last couple of days. All right, so let's look at this example in SHAK. Someone looking at this would say, wow, yeah, this has been going up, but you know what? We have our first down day. And I think this is the market telling me that we've run out of steam, we've run out of gas. So I'm going to sell here, right? This is the way a lot of people would say, this is how they base their trades. Well, what's the first thing we want to do? We want to determine the short-term trend. And when we add the PET-D, we see that the bars are green. So what's that telling us? Remember, I'm not determining the trend. Higher high, lower high type of pattern recognition does not determine the trend. The PET-D, the translator that's translating the market on a tick-by-tick basis, is telling you that the market wants to go higher. Why? Because all the bars are either outlined or colored green. So even though we had a 1 day down move, it colors the inside green. It doesn't color it red. It colors it green because that's telling you we had a down day, but we're still in a short-term uptrend, okay? That's just like having in the middle of summer one rainy day. Well, does that mean summer's over? No, it means that you have a 1 day aberration and most likely the next day or the next couple of days it'll go back to 90 or 100 degrees again. It's the same way with a short-term sell-off, that just because you have a down day does not mean you're in a downtrend. It's just a 1 day downward close in a continuous short-term uptrend. So where someone would usually sell, we're not even going to think about that because we don't go against the short-term uptrend. Now, this is a 1 day pullback. It meets all the other rules of the pattern as well as the indicator. And so this is a 1 day pullback. The other requirements are met. And so strategy 10 generated a buy signal. And look what happened in the next 2 days. You have a very nice little quick little profit there, okay? See how simple this works. This is what we're looking for, these short-term little places where most people think, well, I guess I missed it. I guess I should, maybe go short or look at this market like it's missed its run and now it's going to be going lower. No, this tells you the short-term trend and then it gives you a spot to get in before it resumes. How about that example in the QQQs where you thought the market was going lower? Well, you missed it up here and then you found that there was major support. Remember you took that $10,000 class on what the institutions are supposedly doing? They're never wrong, right? They're always telling you where the support is. So you thought, well, if there's support here, we have an up day, I'm going to buy, okay? Well, is that really valid way to trade? You know, trust me, I traded with the institutions over 4 decades ago, and they didn't have any higher levels of consistency than anything else. So why would I ever base my trade off of the institutions? Why not base it off what the market is telling us first? So what's the market telling us in terms of the trend? Well, we apply the PET D, and it's telling us, because all these bars are either colored or outlined red, that the trend is down. So why would you want to buy going against the short-term trend? Okay? Why would you want to swim upstream? Why would you want to, fly going into a headwind? You want to always go with the current at your back. So if the short-term trend is down, we're not going to be a buyer at all. So there's no reason why we would think the institutions know what they're doing. I mean, it's silly. They're probably, just as wrong as anyone else. That was my experience when I traded with them. So what we have here basically is a one-day pullback to the upside. And so strategy number 10, using this one-day pullback, generated a sell signal. I know you're probably saying, well, what about here, Steve? This was a one-day pullback. Why wasn't that a sell signal? Well, because remember, there are still some remaining rules in the method that I can't divulge right now, and they didn't meet the requirements. But the good news is that this one did. So you could have shorted the QQQs and taken advantage of this 1,000-point downward move in the next 2 days, okay? Nice little trade there, quick little downward move. All right, someone looking at letter O would say, okay, we've got a really strong upward move here, but it looks as if we're rolling over. Well, if we apply the PET D, we're not rolling over. In fact, all the bars are green. And what we have here is a 1, 2, 3 day pullback, okay? A shallow pullback. We made a high and then 1, 2, 3 lower days. Well, we had a setup. It met all the requirements right here, and letter O went up, okay? Now, here are the different ways to trade it. If you want to be a short-term trader, you could have taken a quick couple of day profit and then look for the very next setup, and then taken a quick couple of day profit, look for another day setup, maybe hold up and wait for this one here, or this one and wait for a 1 day, all right? Or you could have stayed in the entire time. The good news is, in the course, we give you different exit levels and different stop placements, different ways to trade it. No two traders should ever trade alike. I know you've been involved with other courses where you go to a chat room or you go to a signal service. They tell everyone what to buy, where to buy at this level, where to sell. Once again, I did that 42 years ago. That's a recipe for a disaster, because everyone comes to trading with different parameters, different risk parameters, different profit parameters. There's no way you should ever copy or mimic someone else. That's why we don't have chat rooms or trading rooms at Specialist Trading or Pro Trader Strategies, because those are recipes for a disaster. If you have a very short fuse, you do not want to take a lot of risk. But what if I had a lot of risk parameters and I don't mind taking a large loss? Well, you couldn't take that same trade. You most likely would stop yourself out at the first time you got scared. So I might have a profit at the end of a couple of weeks, and you may have stopped yourself out in the very first time you had a loss column. So no two traders should ever trade alike. The good news is we give you different variables and ways in which to trade. Here's another example in Apple, okay? This was in May, going back a bit further, but someone looking at this will say, well, we've come down. I agree, Steve. We were in some type of downtrend, but you know what? I took that course on divergences. And what do we have here? We have a major divergence, because that indicator, that oscillator, when we made a low here and then we made a lower low, it did not confirm. So that's telling me that this lower low is not confirmed. This is most likely a bottom, so I'm going to buy here, okay? What does the PET D say? The PET D says poppycock. This is in a downtrend. All the bars are either outlined or colored red. Don't get fooled into using these techniques or methods that have no levels of consistency. Remember, that's the beauty of coming to Specialist Trading, because we have the experience over 4 decades of telling you what works in terms of consistency and what doesn't. I have never found any consistency in using divergences. They're just too subjective. So why would I teach anyone to use that? I wouldn't tell you to waste your time or your money. The PET D, on the other hand, is very consistent. It tells us what the market wants to do, as outlined by the bars here. So rather than looking at this as some type of short-term bottom, this is actually a sell setup. The rules and requirements were met, and look at, you could have taken advantage of this. What happened to the bottom, the divergence? There's no consistency in that. And the good news is, if you miss that, there's most likely another one down the road. You could have taken advantage of this short-term little pullback to take advantage of that. All right, here's an example in HAL. Okay, obviously the market has been going higher, but you think it's rolling over, okay? Well, is it really rolling over? Because every bar is either outlined or colored green. Remember, just because you have a down day does not mean that the trend is down, all right? When you have a down day, once again, that's like having a cool day in the middle of August. Are you going to say to yourself on August 5th, like, wow, it must be winter now? No, it just means that that's an aberration. Most likely in the next day or so, it'll be back up to 100 degrees. It's the same thing when the PET D has a down green day. All right, that's just telling you that you have a sell-off in an uptrend. So rather than think that we're rolling over, you look for this 2-day down shallow pullback and see if the requirements are met. And yes, you had a nice buy setup here and a 2-day move to the upside. See, this is why traders usually lose. They get sucked into thinking, well, we have 2 down days. This is a very bad sign. That chat room I go to says this is rolling over. We've got to short this. Where the market itself is telling you through the PET D translation that no, we're still going higher. All right, here's an example of consistency where one trader may have lost and another one using another entry or exit point may have actually had a profitable trade. As we see here, it looks as if we're going down and making a ledge, but in all actuality, the trend is lower. Now, you had 2 sell signals. The first one most likely would have resulted in a loss, and perhaps this one. And why would they have resulted in a loss? Well, even though the market went down, if you used a very tight stop, which is some that we teach you in the course, most likely you would have gotten stopped out on this bar, this first green bar. If you used one of our lengthier stops that gave you a little bit more room, most likely you would have put it somewhere up here and you would not have been stopped out. So this is why we say where 2 traders could have taken the same setup and one could have produced a negative result and the other one could have produced a positive. And someone could say, well, how can you do that? It's because you have to trade according to your own means. If you have a small risk parameter type of nature, you don't want to have a lot of risk associated with the trade. So maybe you'll have a very shallow risk parameter. Or if you don't mind, if you have a larger size account, well, maybe you want to have larger risk and you'll have a profit. And it works the other way as well. Let's look at WEC. All right, the market is going up. A buy signal was generated because it met the requirements, and as well, all the bars are green. And if you're a short-term trader, you would say, okay, and I got a nice profit here. We made a higher high, so I'm exiting. And I wait for the next setup. Or else you could have said, you know what, I'm going to stay in as long as possible, and we show you ways how to do that, and you could have taken advantage of that. There is no wrong way to trade. The only wrong way to trade that we teach to our students is when you follow someone else. Never, ever follow someone when they're telling you where to buy or where to sell. Once again, I can't say this enough. It's a recipe for disaster. Take it from someone who did that over 4 decades ago. We didn't have signal services then. We didn't have the internet, obviously, but we had newsletters, and I subscribed to all of them and used to buy and sell exactly where these guys told me, where they were experts. And, I lost so much betting on that because it was just really just gambling. Now, here's an example in SHOP, S-H-O-P. Obviously, we're in a downtrend, but you say to yourself, Steve, this is support. I took that class, a class that told me what the institutions are doing, and they're all buying here. And look, we have an inside day that's very positive, and we've got major double bottom here. I want to buy here, okay? So that's your analysis on what you're trading, but what is the market telling you? Well, when we add the PET D, it's telling us that the last 5 bars have been colored red. So it's telling us the trend is down. We're never going to trade against the trend. All right, now, that's not 100% guaranteed, but we're trying to put the odds in your favor, and you will have more consistency. The odds will be better in your favor if you trade in sync with the trend. So the trend, according to the PET D translator, is telling us it wants to go lower. So we apply the rules and requirements of strategy number 10, which we teach you in the course, and they've actually generated a sell signal where you think it's going higher and it's bottomed out. We're saying the opposite. We're saying, no, the market's telling us, not some convoluted tool or not some institution or not some guy in a chat room or on TV. The market, the very source of what we're trading, is telling us it wants to go lower. And if you're a short-term trader, you could have taken a quick 3-day trade. It made a lower low, closed lower, gotten out, or stayed in longer to potentially capture 65 points. Now, we can apply this to weekly time frames as well. We know we have some investors, so when we say short term, this doesn't mean you have to trade tick charts. You can trade short term based on weekly charts. For example here, this is what's called MANH, okay? It's been going up, but it looks like it's rolling over, running out of gas, right? It can't get out of its own way here, and it's starting to really roll over, so you think, okay, I've got to exit this. But we apply the PET D, and the PET D is not saying that at all. On these weekly bars, each one is either colored green or outlined green. So the trend is still up. So we have a short-term shallow pullback. We have two buy signals generated. The first one, now depending on where you place your stop, you could have still been in the trade or maybe stopped out. Let's say you had a very shallow stop, maybe just below that bar. All right, well, you're stopped out. But you can't just say, well, I had a loss, I'm not going to trade this. This doesn't work. You've got to get back into the game because this is what we mean by consistency. If you had a loss on the very first setup, guess what? The very next week, another buy setup was being generated. You got to get back and get in the game and buy that, because if you hadn't, well, you would have missed this really nice run up. Now let's look at a weekly chart to the downside. Obviously, we're in a downtrend on BBBY on a weekly time frame, okay? Obviously, we've been going lower, but guess what? Remember you took that course on the candlesticks? This is a bullish hammer. This is a very important candlestick pattern. You see this at the bottom of trends. It's a bottom type of or reversal type of candlestick pattern. This is something you want to see because it tells you that most likely this is the bottom and you should be buying, right? This is the way 9 out of 10 traders trade. Well, what is the market telling you? Not based on some candle pattern, but what's the market telling you? Market's telling you that, sure, that could be a bullish candlestick pattern, but the market is still in a downtrend. You never want to trade against the trend. I don't care if you're looking at daily or weekly bars. So even though that's a bullish candlestick pattern, we're not going to bet against the trend. We don't want to swim upstream. And on top of that, strategy number 10 generated a sell signal at the very same spot. So which signal would you have rather taken? The buy signal or strategy number 10, sell signal? Now, let's look at another fast up market. This is a daily time frame as we're looking at MPC, straight up. Now, you want to short this because you think, look at it, every day is up higher and higher and higher. Now, we look as if we're running out of gas. You want to short this. That chat room you go to, that guy that's supposed to be a master trader says this has gone up too quickly, too high. You want to short it. He's going to buy the puts. You want to do the same thing. You're just waiting for a crack, and that's your uptrend model right there. So you want to wait for that to be cracked, and guess what? There's your breakdown. So the guy you go to the chat room says, you got to buy the puts. I just bought 100 of these puts. This is poised to go much, much lower to make new lows. The earnings are coming out. The estimates are terrible. So you want to be in there before it breaks down. And on top of that, the institutions are selling. You want to be in sync with them because they're never wrong, right? So you buy the puts. You buy a ton of them. You want to be in sync with your mentor, that chat room you go to. But what is the market telling you? The market's telling us that the trend is up. We don't care. The last 2 days were lower, but they're colored green. So this is just 2 down days in an uptrend. And on top of that, if we apply the rules to strategy number 10, which we teach you in the course, it's not a black box, you have a buy signal right on the very same day that you bought those dozens of puts, all right? So what happened to your grand plan that this was supposed to go lower? The earnings were supposed to be terrible. Let's say the earnings were terrible. It doesn't matter. We don't look at that. That is not required to look at any of our methods. We don't look at fundamental news. All we look at is what the market is telling us. And so it took a little time, and you needed to give yourself some room, but if you stayed in this, you had a really nice trade. Now, as we go up higher, we see that we have another pullback, short-term shallow pullbacks. More signals are generated, and you could have gotten out at the new high, all right? And then as you wait for some more shallow pullbacks, you see that more signals are generated, and you could have gotten out as you made new highs, all right? So there's different ways to trade. You could have taken all these separate setups and gotten out, or you could have stayed in and just tried to get as much profit as possible. We teach you all these different things in the course. Another example in crowd CRWD, obviously we're in a downtrend, but you say, Steve, this is a bullish inside day pattern, extremely bullish. All right, I want to buy. This is most likely the very bottom of this downward move? Well, if we apply the PET D is saying the opposite. The PET D is saying, sure, that's a bullish inside day in a short-term downtrend. So I don't want to go against that. And it generated a sell signal, and the stock went down. What happened to the bullish inside day? Okay. You see the importance of trading in sync with the short-term trend. Lastly, let's look at XLNX, and then we'll go to some real recent charts here. All right, let's go through the process of trading. Remember, the first thing you do in this simple process is to define the short-term trend. How do we do that? We apply the PET D. All right. Now, you tell me, what direction is the trend? In other words, which direction is the PET D telling us it wants to go? Is it saying that you should be buying or selling? It's telling you should be selling because all the bars are colored or outlined green. And guess what? We've really gone down much lower. The PET D was telling us this much higher. Okay. Now remember, the PET D does not recolor the bars if you're worried about that, and you wait until the bar is closed. Once the bar is closed, it stays at that color. It doesn't repaint, it doesn't regenerate, but it's always being updated throughout the history of the bar. So if you're waiting for the bar to be updated by the end of the day, during the day, it may have been green. By the end of the day, wherever it closes, that's what you justify what the trend is. So these are daily bars, and once you close, that's going to be the color. It's never going to change again. So all of these bars, now even though we had some up days here, look at this update here, another one here. Someone could say, but Steve, these are up days. Look at, we closed in the top 25%. You're always talking about that. You're right. That's a very bullish signal, but only when it's in sync with the trend. Remember, an up day is just like, I'm on the West Coast in California, and we have these things out here called Indian summers. That's where even during the winter, as we had just a week or so ago in November, in October, you will have days where it's 90, maybe even 100 degrees in the middle of winter or our fall, all right? And then a day or two later, we're back to 65 degrees. That is what this is. This is a close to the upside at the very top, but it's outlined red. So this is just a short-term aberration. Just because it went up does not mean that you're in an uptrend. If it goes up and closes up the way this did here, the way these two bars did here, you wait to see what the outline is. And if the outline is red, that is just an up day in a short-term downtrend. That is not a positive sign. So what you want to see is if the rules and requirements of strategy number 10 have been met, and guess what? You not only had a sell signal met right here, you also had one here. You could have taken advantage of this move to the downside. Now, let's look at some setups within the last few weeks, okay? Because I told you I had a lot of slides to share with you, and I know some of the examples I was giving you just recently were just, a month or two old. Let's show, just because we weren't cherry picking, let's show you what happened this last week. For example, let's say I gave this webinar a week ago, and you decided to become a member of the course. These are some of the setups you could have taken advantage of this past week, okay, the last few weeks. Okay, OLED. Even though it looks like the market's just kind of going sideways, the last 4 days, the bars are green. Even though we had a down day here, all the bars here the last 4 days are green. And the requirements were met. Strategy number 10 generated a buy signal. This was just last Tuesday, a little over a week ago. 28 points in the next 4 days, all right? Do you see why we mean this may really be a perfect method for option traders? If rather than saying, well, Steve, this is an expensive stock, I can't buy this stock, it's too expensive for me, don't you think you could have bought some calls or perhaps some, a spread to the upside with an upside advantage? How about ETSY? Well, this is going back a couple of weeks here, and even though this is a little bit more aggressive, you only have 2 red days, that's still enough for the market telling you the trend is now down, according to the short-term method. So on the 21st, a sell signal was generated. It quickly fell 15 points to the downside. Okay, obviously some news came out or something happened where the stock gapped down. We had no idea what that was. Remember, we're in no way are any of the requirements of strategy number 10 based off news or fundamental events. This is solely based on what the market is telling us on the short term. How about another example on the 29th, okay? A buy signal was generated in MUSA. Even though it looked like we were just slowly creeping up, this is a short-term uptrend. All the requirements are met. 25 points in 2 days, all right? How would you like to have calls on this, okay? 25 points in 2 days. beyond, all right? This is going steadily lower, or a lot of people are looking for a bottom. This is the beauty of these fast-paced markets. On the 21st, where people would say, well, I can't short this now, Steve. It's been going down too much. Or say you were long. Say you thought this was a great investment and it's just really been disappointing. Well, you may want to use this as a point of exiting your long-term investment because a sell signal was generated on the 21st and the stock went down another 30 points, okay? Coming into the first week of November. If you missed that, guess what? On the 28th, it still gave you a chance to either get out or buy some puts prior to that big drop. And then again, on the 30th, right here for a quick short-term trade, you could have gone short on the 30th just last week for 4 or 5 days to the downside. And let's look at something that happened on the 30th. This was a week ago today, all right? What you could have done, the process is you could have scanned for this and seen at the end of the 30th, a buy signal was generated in ABMD, okay, on this downward day. You could have picked up some quick calls and taken advantage of 38 points in the next 3 days. So this is, I've gone to webinars myself to see what other people are talking about, and I've always been kind of skeptical because a lot of times I'll see examples of what they're showing, and a lot of times these trade examples are 6 months to a year old. And I say, well, yeah, but how do I know if it's currently working? So that's why I wanted to share with you what happened this past week. All right, these are actual signals that were generated that you could have taken advantage of. So let's recap before we go into the question and answer portion of today's webinar. Remember, the short-term process is very simple. The first thing you want to do is apply the PET-D to determine what the trend is. We will never go against the short-term trend. Then, if we're looking for buys, because if the trend is up, well, then we're going to identify a shallow pullback. Now, if you're not familiar with a pullback, a shallow pullback, that's just a 1 to 3 day sell-off in a short-term uptrend. Now, it's just not that. You need these other requirements to be met, but that's the basis for this. Now, let's say the short-term trend is down. Well, you'll see a series of red bars painted by the PET-D. Now we want to identify a shallow pullback, but in this case, that'll be a 1 to 3 day bounce in a short-term downtrend. I know a lot of you are saying, well, how do we know if it's a 1 to 3 day bounce? Well, that's where the other rules and the requirements come into play, which we teach you in the course. Remember, being out of sync with fast-paced markets often results in missed trades and or losing trades. If you've ever said to yourself, oh gosh, this stock went straight up and I missed it. I wanted a chance to get in. I didn't know how to get back in, or I didn't know how, it was going to go straight up. Well, this is a great method to offset that. Oftentimes, not guaranteed, but oftentimes, in a fast-paced upward move, it will generate some buy setups. And as well, if you have a losing trade, well, oftentimes this will get you on the right side because it's based on the short-term trend. You won't be losing because you're out of sync with the short-term trend. Now ask yourself, we've only got less than 2 months left in 2019. Do you think this new strategy can help your trading going into the next year? Don't you want to start off 2020 in the right direction? We have a great discount for all the attendees today. Thank you for taking time out of your Wednesday. Here's the offer we have for you. We're going to give you a great discount to become a member of our strategy number 10 course. Now, this is entirely new. We haven't started the course yet. In fact, people have signed up, but they haven't been issued the course yet. We want everyone to get a fair chance to this. So you have a chance to become right in on the ground floor, becoming one of the first students of mine to trade this entirely new short-term strategy. It applies the PET-D for the short-term trend. It's a combo indicator pattern-based method. You're going to get the complete rules, all the different ways to enter, all the different ways to exit, all the different ways to place your stop. You're also going to be taught the aggressive as well as conservative version. Remember, the average trade, if you're trading this on a short-term basis, lasts anywhere from 1 to 5 days. So it's perfect for option trading. But we teach you ways to stay in longer if you'd like. On top of that, you're going to get educational correspondence. With all of my strategies and methods, you get my personal email address. In fact, I was answering email questions today with other courses we teach. So I'll always be there to answer any question that you may have. Now, we're not just going to stop there and give you the course. We're also going to throw in our PTS Primo charting platform. This is the educational platform that teaches you how to trade these fast-paced markets, because we want everything to be simple. The way you saw in today's presentation, the way everything was displayed and everything was colored with the PET-D bars, we want you to be able to trade that way. So what we're going to be doing is offering you 12 months free with your purchase of the strategy number 10 course. Okay, that's a great savings right there. But you're not going to just get the strategy number 10 course. Here's what's included in that with that 12 months of free usage. Obviously, you're going to get strategy number 10, the up and down arrows. You're going to get the PET-D short-term directional tool, which is included in the platform. So in other words, all you have to do is have one-click access and see if the PET-D colors the bars green or red. You're also going to get a tool I developed with Pro Trader Strategies. That's our strength of trend feature, which will tell you oftentimes when a trend is running out of steam or if it still has some momentum left in it. But I think one of the best things included with our platform is our signal scanner. Because let me show you how simple it is to apply this process. I have a pet peeve about scanners. I have used in my four decades and 40 years of trading just about every platform you can think of. I won't mention the names, but anyone out there I have used. And I really have a problem with a lot of their scanners because, believe me, some scanners I have used which I actually haven't been able to figure out. I mean, they are so complicated and so just convoluted. It's taken me hours just to get a simple scan. I can't figure out how to use it. Let me show you the simple process of this. If you were a member of our strategy number 10 course, it would be as simple as clicking on this page, our scanner page, okay? And you'll see a series of green or red bars once you hit scan. All right. The green bars simply mean a buy signal has been generated in the corresponding stock. A red bar means a sell signal has been generated. Okay. This entire process takes about 2 minutes to scan roughly hundreds of stocks. Now, let's say roughly about 3 weeks ago, you were scanning and you saw that a buy signal was generated in KSU. So you punch up the chart. All right. And you say, well, it's kind of been going higher. Let me apply the PET-D. And you say, well, yeah, you know what? All the bars are green. You apply the rules and you say, guess what? That actually is a buy signal. On the 14th of October, a buy signal was generated in KSU. You could have decided to buy calls the next day or shorted the puts, sold the puts, anything you're interested in the way you want to trade options. You could have actually purchased the stock. But guess what? In 1 week, the stock went up 17 points. Okay? So that's the beauty of our scanner. All right? The beauty of it is that it really takes a lot of the hard work out of it for you, and that is included in our platform. Now, firstly, be one of the very first to take advantage of this entirely new strategy. All right. Remember, we're just giving it to you right now before we've really made a big outward announcement about this. We've only given one webinar so far about this. This is the second webinar. We'll probably give one more before we go and just make this an entirely new course. You want to start off 2020 in the right direction. Think of it. A year ago, most likely, you were excited about starting 2019. You had all these goals, all these dreams of how well the year was going to be. And guess what? I can almost guarantee you that the majority of you are nowhere near where you thought you were going to be by the end of 2019, all right? It's most likely because you're trading outdated things that have no levels of consistency. Why not start the year off in the right direction with a great method for capturing these short-term trends? It's great for offsetting if you're a swing trader or a long-term trader. And once again, if we go into a really quick downward move, this is going to be the type of method you're going to want to be applying to downward trending markets. So this is our new short-term trend trader course. Strategy number 10 is included. Let's break it down, okay? Now, this early pre-launch special price, which includes the PET-D, if you're not a PET-D trader, which includes the PET-D, normally is going to be costing roughly in the next weeks or so, will be costing $5,000, $49.95. We're going to discount it to all the attendees today. We're going to save $500 and only charge you $44.95, and we're going to offer you payment plans. So if you still cannot come up with that one lump sum of $44.95, don't worry. For a small deposit, you'll be still able to be up and running in the course, and you'll be able to make payments. You'll have a prepayment plan, so it'll be a great way to get involved in this. Now, let's say, I know a lot of you are saying, well, Steve, I already have the PET-D. I love the PET-D. I use it for my swing term trading, and I also use it for investments, but I already have it. Don't I get some type of write-off on this? Yes. If you already own the PET-D, the pre-launch sale price is, or I should say regular price is $34.95, but we'll discount it as well. You'll get to save $500, and we'll only charge $29.95 for the strategy number 10 course. Why? Because you already have the PET-D. And once again, you can also apply a payment plan with the $29.95 course, okay? Remember, 12 months free of the platform. This is a great, great offer. That would usually cost you close to $2,000, okay? Now, here's how to take advantage of this. Contact Pro Trader Strategy. They're my sister site course. They handle all the discounts, all the tech support. They're the ones to be talking about in terms of the payment plan. So if you want to, establish some type of payment plan, I would probably call them first. There's no obligation. They would be happy to answer any question. Call them directly at area code 310-598-6677. They have qualified trading consultants manning the phones right now. They can set up a payment plan or answer any questions concerning the platform. Now, this link you see right here at the very bottom is the link that will take you to an informational page as well as a sign-up page. So you can click that on. I don't believe it's a live link, though. So what we're doing is posting the live link in the chat box. That's the one you want to click on, and it will take you to that sign-up page, okay? Now, remember, there's absolutely no obligation. If you have any questions concerning discounts or the platform or the Pet D, contact Pro Trader Strategies. Now, I promised you I would be answering the questions at the very end. So if you do have any questions now, go to your question and answer box. Just simply open that up and type in the questions, and I will be happy to answer them. I see we have one question. Do the Pet D bars color on the bar close? James, no, what they're doing is they are constantly coloring. I think I stated this earlier, but they are coloring while the bar is open. So let's say you're looking at a daily bar of Apple, and I don't know what the bar is right now, but let's just say it's red, okay? During the day, you will see it being red. As the bar gets larger or changes its size, you will see the color be red, either outlined or filled in red. Now, if the bar changes or something happens, let's say there was a big move to the upside and the bar would change green. But remember, all we base our decisions are the close of the bar, all right? Let's say that was a weekly bar. If you were looking at a weekly bar, well, you would be doing the same thing. You would wait for the weekly close of that bar to determine what the short-term trend is, okay? Good question. People are saying, can I apply this to currency pair trading? You know, it's been our experience after testing this for a while that this works the best with stock trading, okay? And as well as the time frame, this works much better with higher time frames, such as, let's say, hourly bars, daily bars, and weekly bars, even monthly bars. So we would suggest applying it to that. If you're a type of trader that likes to trade tick bar charts, because of the short-term nature and the noise associated with that, strategy number 10 is really not the perfect scenario. We have other methods at Pro Trader Strategies and Specialist Trading that can trade those short-term markets like tick bars and 5-minute bars much better than strategy number 10. Strategy number 10 is really geared towards stock traders or option traders for stocks who trade daily bars, weekly bars, and monthly bars. That's really where it works the best, okay? Can you name of some of the platforms? Well, we are currently working with some of the platforms to have strategy number 10 applied to, and that is Pro Trader Strategies, the platform. Obviously, it's on the Pro Trader Strategies platform, but we have it for TradeStation, Metastock, Sierra Charts, MT4, NinjaTrader, and we're working on Thinkorswim. But remember, it is so much easier to apply simply using our platform, which is included. You're getting a full year of that. It's so much easier, and everything is one click away. You know, with those other platforms, you're going to have to open up, the platform. You have to open up a specific indicator page. You're going to have to go down and scroll and open up the indicator, then most likely click on something else. With our platform, everything is one click away, and you're right there. The scanner, the Pet D, the signals, they're right there. So it's a lot simpler. You'll get your results a lot quicker, okay? Okay, good questions. If there are no further questions, remember, if you are serious about taking your trading to the next level for 2020, but you have more questions concerning pricing or tech support, please do not hesitate to contact Pro Trader Strategies. Call them at the number there, 310-598-6677, excuse me. They would be more than happy to work with you, establish a payment plan, and you would be up and running and one of the first to be trading this for the new year, okay? Once again, I'll be there with you every step of the way to answer any question and to answer any emails that you may be sending me, okay? All right, as we close, I just want to thank you so much for attending today and taking time out of your Wednesday morning as we take one last look at our disclaimer. Please remember that all examples are strictly for educational purposes only. And lastly, I just want to thank you for taking the time out of your day to come see this. But most importantly, I look forward to all of you becoming students of mine in the new short-term strategy number 10 course, okay? Thank you so much for attending. Hope to see you in class. Bye-bye.